Okay, funnily enough, I don't speak much in in real life because when you trade, I guess I guess what you do really is you're in front of a computer or you you don't interact a lot with other folks, especially on public speaking. But anyway, I'm back here. Is everyone hearing me again? I just had to drink some water. And I know it was a lot of information, and I will just I'll allow some time for the questions to come in. But we're going to speak about the 1200 pip opportunity, and we're also going to speak about uh, what's happening. I know some of you had questions about what's happening in the euro. So we'll address that shortly. Can everyone hear me all right still? Okay. Okay, you can go ahead with your question. Okay, let me just speak about what's happening in the markets currently. Uh, Everybody should be able to see a chart coming up here of eSignal. eSignal is my favorite charting package. Okay, so what we see here is a chart of the that was a British pound. But what we have here is a chart of the euro versus the US dollar. And let's see exactly what's happening. Let's analyze this situation. Okay, so the euro versus the US dollar was in a broad uptrend from June of 2012, much of 2013, but the action has been fairly choppy. And we have seen a huge pullback from just about 140 down to 133. Now the key area is where I have drawn on the on the chart here, this red line. If the market breaks below this 133 level, uh, we could be in for a much deeper pullback in the euro US dollar. So that will end the ABCD pattern of higher highs, higher lows. Now, what we see here, I mean, I've drawn here a flag. Let me just go down to the 4-hour chart. This is a flag, and a flag in a downtrend. I mean, the momentum of the market is down since May, mid-May. Excuse me. So, the momentum of the market is down. So, we have a flag appearing here, and the rules of technical analysis is that the market oftentimes breaks below this flag and continues in the direction of the trend. So we have to keep an eye out on that. But the key area is 133. Taking a look at the weekly chart of the euro, US dollar. Let me see if my pen is working here. It's not coming up, but we have a head and shoulders pattern. This is the left shoulder. Over here is the right shoulder. This is the head. And this could be a broader pullback within the context of a weekly chart. But we have to keep an eye out on that to see if that is occurring. Now, taking a look at the US dollar index to see exactly what's happening with the US dollar index, we see that a possibility could be that the market is correcting this massive wave down. As you can see, it started here from about 84.70, down to 79. So the market looks to be correcting this wave down and is heading towards the Fibonacci retracement level of 50%. It's not at 50% yet, it's just below 50%. But this market could go up to the 50% Fibonacci retracement level or the 618 Fibonacci retracement level. Now, for those of you who did not see the video on Fibonacci retracement levels, as I said earlier in the webinar, it indicates an area of support and resistance. So the US dollar index moves in the opposite direction for the euro. So if the US dollar index is moving down, that means the dollar is decreasing and the euro is increasing. So the market could essentially stall out at this 50% retracement level. And remember, in the webinar, we spoke about pivot points. So let's just take a look at the pivot points for the US dollar index. We see that the monthly pivot point is up at 82.10, and the Fibonacci retracement level is at 81.90. Right here it's a 50%, 81.90, and the monthly number is at 82.10. So the distance between 82.10 and 81.90 is not really that far. So that could be an area of significant resistance for the US dollar. And that is where this market could eventually top out before heading down. So if that does happen, we will see a huge move up in the euro currency. So that is something we definitely have to keep an eye out for. Remember, when we are trading, we have to kind of look ahead to see what is going to happen. And if that happens, I mean, everybody is now long US dollars. The retail crowd is long US dollars. So sometimes it's good to be a contrarian and to see where this move is going to bottom out. If you have any more questions, okay. Oh, hello again. Hello again, Kenneth. How are you doing? Yes. Okay, Japanese yen. Okay, the Japanese yen. Kenneth asked me about the Japanese yen. The Japanese yen was in a triangular consolidation pattern. The market broke briefly above the triangle, as you can see here. Broke briefly above the triangle, came down, tested the triangle, broke below again, and is now moving upwards. A move above 103 could signify a long for the Japanese yen. That could signify that the market will continue this upward trend that started in when is this? In 2012. The market could continue this upward trend. So again, keep an eye out for that for the Japanese yen. Now, a market that is in a nice uptrend also, that the signals are a bit clearer, is the Canadian dollar. We can see that the market is in a steady uptrend. The market retraced to just above the 618 Fibonacci retracement level, as you can see, and is now moving upwards. So for the trend traders, this could be a market that you take a look at. And what I'm expecting is that this market is going to move above this 113 high that we see here. The market could move above this 113 high, and it's at 109 now. That would be over a 400 to 500 pip move. That further move that could happen in the Canadian dollar. Why not? Who is that? I think that problem is just you alone. Who is that? Bill? Can everyone else see the screen? Bill says the screen has gone blank. Has it gone blank for everyone else? Okay, British pound. Okay, I will deal with the British pound, Canadian dollar. Hi, David. How are you doing? And then I will deal with the British pound, Canadian, Australian dollar. Okay, so the British pound was the star of the year so far. I mean, it was in a steady uptrend, but the market hit resistance and has pulled back. It actually broke above resistance, closed above resistance, and this resistance is at 170.43 that we see here, this high of 170.43, denoted by this red line. The market broke above resistance and is closing back below the resistance. So what this could signify is a failure at that 170 resistance. So that's what's happening in the British pound, US dollar. The key thing to see is if the market stays closes below this 167 level. If it does, it could mean further bearish action for the British pound. Now, looking at the British pound, Canadian dollar, we see that the market is in a huge triangle. And in terms of your opportunities in the market, this is a clear opportunity. This is the clearest opportunity we have for a trade. If the market does close below, I would say 180, the market is not, as you can see, this huge triangle. If the market closes below about 180, we could see a further decline in the British pound, Canadian dollar, a pretty significant decline. And one thing with the British pound, Canadian dollar, it really does move. And for those who study technical analysis, you know that when you have a triangle, the move out of the triangle can be pretty violent. So this is a market to look out for. Now, if the market goes upwards and closes above the triangle, we could see a continuation of this uptrend, because the market is now in an uptrend. We could see a continuation of this uptrend, and the market could hit over 190 or even 192. So that would be a 1,000 pip move in the British pound, Canadian dollar. So either way, when this break occurs, I'm expecting a good move down. And the Forex Income System members definitely will be taking advantage of this move. Okay, now the British pound, Australian dollar is in no man's land now. I mean, the market was in an uptrend, or is in an uptrend, pretty strong uptrend. But recently we have had this choppy price action. And what is happening is that the market is being held by this trend line here. So if this trend line holds, we could see the market turn around and move upwards. But this market is in a consolidation pattern now. And this could be interpreted one of two ways. This could be a bear flag, which the market could break below the flag and move down, or the market could continue its upward trajectory. David, the currency moving 1,300 pips could be the British pound, Canadian dollar. As I said earlier, let me just get back to it. This is the currency pair. As you see this huge triangle, the market is in an uptrend, pretty strong uptrend, And for those who don't believe that these markets can trend very well when they are ready, look at this move from 155 in the British pound up to 185. That's a 3,000 pip move. And even lower at the start of the move was 150 up to 185. So when these markets decide that they are going to trend, they really trend. And this is an opportunity I wouldn't want any of you to miss out on, especially this British pound Canadian dollar. This is what I say is the best opportunity in the Forex markets now. So it's just a matter of waiting for this market to break. Okay, Bassett, you said no. I don't know what you're speaking about. No, as in, can everyone still see the screen? Yes, yes, yes. Okay, everyone is seeing the screen still. Forex income, okay, what, as I said in the question is what happens after you apply? Okay, immediately after you apply, what will happen is Phyllis will contact you tomorrow. Phyllis will contact everyone tomorrow, and I'll speak with you either tomorrow evening or Thursday morning. Okay? Who is that? Yes, I actually have a couple of Davids on here. Okay, David, I cannot see the applications coming through. For some reasons, I'm not seeing my email normally notifies me by email. I'm not seeing it come through. So I'm sure if you did it, it's there, and I'll make a note that you applied, okay? The conversation, okay, the conversation will be around 30 minutes. And folks, the goal of this account is what we're trying to do is 40% per annum. So a Forex trading account is not a conservative, overly conservative account. This is an account to get more aggressive. So that is the point of a Forex trading account. To be more aggressive. Now, with the trade copier, if you find it a bit too aggressive, what you can do, the software will allow you to cut your risk. Let's say you want to cut the risk in half or a quarter of what we're doing. We risk normally 2% per trade. So if that's too rich for you and you want to risk less per trade, you can do that automatically with the software that we use. Okay, question, how often are trades taken? Okay, trades are taken when they occur. Like recently the markets have been very uncertain, so we're just in a wait and see approach, because the point of trading is to make money and not particularly to just enter trades willy-nilly. So what we're doing is waiting and seeing and letting the markets determine where we're going. Did you change webinar software? Yes, I did. Okay, the course, how it's, okay, the question is, how is the course organized? The course is organized online and you'll have immediate access. Okay, what we do is that we split up the course into It's about the course about 18 videos, and we deliver those 18 videos over a period of 4 weeks. And the reason we do that is to prevent overwhelm, because what I find is that folks, if they get in too much information, what will happen is that they aren't able to devour the information. Okay, the next training webinar I will be having live, that's for members only, will be on Friday. Friday at 2 p.m. Eastern Time, I'll be doing a training webinar. Yeah, that's correct. And the course, you can go over it as many times as you want. I mean, it's there for you to play over and over and over. I know some of them are a bit long. I believe the longest one is about an hour, the video. But some of them are about 10 minutes, 15 minutes. But you can pause the course, rewind the course. I mean, it's up to you. I mean, I know a lot of you are sitting there contemplating whether this is for me or for you. But just remember to make a difference in your life, to make a difference, you have to take the first step. And that's why we have the application process also. The first step you can do is apply. I mean, you don't have to make a decision right now on the webinar, but simply apply. The deposit is 100% refundable. If you don't feel it's for you, well, that's fine. But take the first step. That's what I always tell folks. Recently, my niece came down, and we went to the beach, and she was just afraid of the water. And what we had to do was just say, take the first step by the wave, by the beach side where the water hit the sand. Just take a step and feel the water. Okay, that's like applying. So it took a while for her to take that step, but she took that step, and eventually she was in the water after a couple of steps, really. Thank you very much, David. I don't know if everyone can see David's comment. I may just copy it and paste it here. But no, I can't copy and paste it for some reason. But thank you very much. And he's basically saying, everyone, I must tell Beyond is a real deal. No BS from him. I have been with Beyond for a long time. Makes you money. Thanks, Beyond, for the support. And thanks, David, because you have really showed up at most of the webinars that I remember having. So thank you very much for coming and listening. I mean, clearly you have to be learning something. Okay, do we have any more questions? Yes, do I do private one-on-one consultations? Yes, I do. I rarely take folks just because of time, and for someone to do something like that, it's best they join the program first and go through the education before a one-on-one. I normally take about 2 students one-on-one per year. I haven't taken any for this year so far because we're finishing up some folks from last year. But my main interest is when I take someone like that is, are they going to succeed? So if I interview them and I don't believe they will succeed, I won't take them. Okay, next question. The US dollar. Okay, the US dollar has seen some strength recently, but remember, it's what could be happening, as I said, is that the market could be just correcting this wave down that we see here. We had pretty significant support at the 79 level, and the market the market hit this support level 1 time, 2, 3, 4, 5, 6 times, and the market could just be reacting off of this level and heading upwards as a retracement. So don't let the recent strength fool you. I mean, if things change, then I will let you know. But let's just take a broad look at what's happening in the US dollar. I mean, we see that this is the US dollar index, and when the index moves down, that means the market is in a downtrend. Okay, so or sorry, when the index moves down, that means the US dollar is weakening. So what we are seeing here is a triangle in a downtrend appearing. And eventually this triangle will break. And when it breaks, I believe it will be pretty violent and you will see further losses in the dollar. That's my long-term picture. So my recommendation for folks, especially in the States, the US, is a Forex account is definitely something you should look into, because whether you plan to trade Forex and learn to trade Forex yourself, the dollar will decline in the next couple of years, and you will see the value of your dollars decrease. I mean, as we can see on this chart, the period from 2000 to 2008, we saw the dollar move from 120 to just over 70 in the US dollar index. So this market could break from 81 down to 40, and that will be a 50% decline in the value of the dollar. I mean, you can just look back to 2001. What do you pay for things? What did you pay for a gallon of gas? Remember, a gallon of gas probably was $1, $2 maybe, $1 something. Now it's over $4 or $5 a gallon. So this is the effect of a decline in dollar. You could even go back further into the 1970s and 80s, where a gallon of gas was a couple of cents. So, okay, for those who have applied, I must congratulate you. What I can see is who applied in order. So that one-on-one bonus will apply for those, the first 10 folks. And I just did a one-on-one bonus that someone who came in in May, he was one of the first to apply, and we did a one-on-one bonus, and it was a very good session. This person went through the course and they were just ready to go, and I believe he will definitely be successful at trading. And do we have any more questions? Okay, the question is, can this method be used to trade other markets? Definitely, because technical analysis is used for every market. I mean, what we can see And this is a skill. Once you learn the skill. This will last you a lifetime. Because I don't know how many of you have investments in the stock market. This education can be used for the stock market because the symbols and the chart patterns are very much the same. For example, I mean, let's take a look at the S&P 500. What's happening? The market is in a strong uptrend. So, I mean, there are folks that are keep wondering when the market will top out. Okay, today is the 13th of August, and the market is showing no signs of topping out just yet. I mean, the market is still in a pretty strong uptrend, and there have been many opportunities to get along this market. Earlier in the webinar, we spoke about the pullback. For example, this was in November 2012. Market pulled back to the 618 retracement level and a pivot point level and moved up. Okay, you missed that move. The market again went up, pulled back to the 50% retracement level. This is the S&P 500 ETF, SPY. Sorry for those who don't know what it is. But the market pulled back to the 50% retracement level at 155, shot up again. The market pulled back again from this low at 155, coming all the way back almost to 155 again, but shot up again. I mean, and this was closer to the 786 retracement level. Market moved upwards again, and again the market made a new high, pulled back to the 786 retracement level, and the market moved up again. From here in February, the market made a new low, a dip, and went up again. So you could have just written this trend over and over, just using these simple signals that I teach in the course also. And combining the power of stocks and Forex, you can really have a diversified portfolio, because at some point the market will top out and stocks may not be doing very well. Well, what you could do is move some money into Forex, because what you may find is that a particular currency pair may be trending in the Forex, and you move it into the Forex. And then what you may find is that, let's say the market is tanking, you may find that interest rates are going up. You could and start trending. You could then look up the interest rate ETF and invest in that. So you will always be investing in assets that are trending and moving, so your money is always moving. Well, that's the approach I use to trade. Correct. Yes, Jamie. Yes, the fact is, no matter what, there's always a market that is trending. I mean, let's take a look back at, and we have been going on for quite a bit. So I appreciate everyone who's sticking with me. But let's just take a look back at 2008, when we had the crash. Okay, so you remember this S&P 500 ETF. Let me just take the S&P 500 futures in there. Okay, so this is S&P 500 cash. Let's go back to 2008. These things are fairly easy to see in the markets. Again, if you know what to look for in the markets, you will make money. If you don't know what you're looking for, you will lose money. So if you want to So the thing is to not be like the general public in losing money. Now, let's see. Okay, let's just go back and the stock market. Okay, this is a monthly chart of the S&P 500 in 2007. What we see is that the market hit a top here in 93, and then in 2007 the market was at that very top. Now, simple technical analysis shows us that this is what we call a double top, and we got a sell signal, and the market moved down. Now, let me just move to a weekly view of 2008. So that was a monthly view. You saw the double top. Now the weekly view, sorry, not the weekly, let's go to the daily view. We saw that there was a double top and the market gave pretty much a pretty strong sell signal. In 2008 is so far from here, so it's just taking a while. Okay, so the market started moving down, trending down pretty steadily in 2007. And look, everyone was saying that this market downturn was a surprise. But you see that the market failed at the previous high and started headed down. So what do we see now? A series of lower highs, lower lows. So market was headed downwards. And this was in May of 2008. The market made a new low, then came up to, guess where? The 50% retracement level. This was also a pivot point resistance. So this was when the general public was worrying about the markets, but they weren't too worried. The market was heading down, and then look what happened. The market was in a downtrend, came up to the 50% retracement level, and in August the market collapsed. But knowing what to look for and knowing what was going on, you could have been short this market based on the simple A and B C D patterns, because we see that the market started heading downwards, and with this massive decline, you could have captured just about all of this decline. And this would have been a pretty good risk to reward trade. And this was a monumental move down in the markets. But those are things that we cover in the course. And when you join the Forex income system, you will get a lot of insights on the live webinars of what is happening in the markets. But for now, stock market, to just summarize your questions, stock market's in an uptrend, and eventually it will turn around, but we just haven't seen that yet. Okay, are there any further questions? We have been on here for a while. Dean, yes. If you have applied, well, as I said, I can't see the applications, but I will take a note down, and Phyllis will be contacting you tomorrow. So just remember, click the button on the right, apply, or acestrading.com/apply, acestrading.com/apply. Get your application in, and we will speak either tomorrow, which is Thursday, or Friday, which is not the 13th, which is the 15th of August. Okay, are there any further questions? Any further questions, comments? I hope you all liked the webinar, and I really enjoyed bringing it to you. And basically have a good night. Thank you for all for listening, and okay, yes, 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 Andrew. Okay, yes, I. That was a private question. Okay, the answer, Andrew, is yes. Okay, thank you all for listening. I've been on here for over 2 hours, so 2.5 hours. So thank you very much, and I hope you enjoyed the webinar. And for those who enjoyed the webinar, you can just send an email beyond@acestrading.com. I appreciate it. Thank you for listening. Okay, one quick before I shut down the room, acestrading.com/apply. Yes, Andrew, acestrading.com/apply. All right, that's the card button. Okay, I'm gone now for sure. Thank you all for listening and have a wonderful evening.